Welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at a market inefficiency. An inefficient move is when price moves quickly. So let's go onto the charts and see how the price moves quickly, what exactly we're looking for in an inefficient market move, and how to take this reversal trade. Here we're looking at how to trade an inefficient market move. This is EuroCAD 15-minute chart. An inefficient move is when price moves very quickly in one direction. Usually this is caused by either some comments that come into the market and market reacts to that, or some news that comes out and price pushes up quickly. Here we see that once price moves up, it doesn't really move efficiently, in the sense this is an efficient move where price will go up and down and carry on. But in an inefficient move, price will move very fast, and usually we don't see it stopping for anything. It just takes off and continues on. When we get an inefficient move, usually it creates a vacuum in the market. It's just the unidirectional move. And because there's this vacuum in the market, it's just law of physics that price will come back and fill that vacuum. And that's exactly what we are looking for. Now, we do have to be careful with an inefficient move, because sometimes price will consolidate like this, and then we'll see that continuation to the upside. So with this one, we have to really wait for price to show us a reversal before we commit to this trade. So first step here is to look for an inefficient move. In our case here, we see this inefficient move, and then we wait. We wait for price to show us that it wants to move lower. So in this case, price comes into this resistance area and it's not able to break the high here. Price tries to break the high, but then fails and closes inside. And then we get this bearish pin bar here. This bearish pin bar is a good indication that price is likely to move lower now, because it has tested this level multiple times and it hasn't been able to break above that or hold above that. And once we get this bearish pin, that is a good sign that we're likely to see the price move lower. So after this bearish pin bar, we will enter the trade short, because we are looking for price to reverse this up move here. We enter the trade short, our stop would go above the high, making sure there's some room for trade to breathe in case price comes and tests this level once again, and we don't want to be taken out with a spread. So we move our stop above the highs here. After the pin bar, we enter the trade short and we stay with the trade as the price is moving lower. And generally what you'll notice is the move down here, or the move to fill this inefficiency, will be an efficient move, meaning that price will go up and down and it's not going to shoot up or shoot down just like it shot up. So it will go slowly down instead of shooting down in one go. So we enter the trade, we wait for trade to play out, and our exit will be at the bottom of this move. So where the move started is usually where the price comes down to. So we put our exit, our take profit target, just above the place where it started, the takeoff point. So we exit the trade here. From entry to exit, we get 91 pips in the trade. So just to recap, an inefficient market move is when price shoots up quickly, and usually it's a result of news or some comments or low liquidity in the market. So once we see an inefficient move, we just have to be careful that we give the trade the time to actually play out, and we look for price to commit below the resistance area before we enter the trade, because it can also continue up, giving us this continuation trade to the upside. So we have to wait to make sure price doesn't close above our high. So we are waiting for price to show us that price rejects the high and closes below the high. So this pin bar here is a good signal for us to enter the trade, because at this point price has tested this high several times and it has failed to break the high. So after the bearish pin bar here, we enter the trade short and we stay with the trade till price reaches the base where the move started from. So we exit the trade there. From entry to exit, our profit is 91 pips or $910 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course. Thank you so much for joining me today. If you like this episode, please feel free to subscribe to the channel and share it with your friends. I'll be back with another great trade setup next time.